Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their positioning. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is about to test and has already tested quite precisely exactly here this quite strong level of previous historical resistance, which is now turned support. In fact, from here, all these previous rejections to the downside have been created. Then the market broke above that zone and all that previous resistance was turned support here. And the market has already tested it and has the possibility of going for another test of this zone before then rejecting this level to the upside and respecting it as previous resistance, which now, after the break to the upside, is turned support. We can also notice that from a pattern standpoint, we have a very clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can notice how we have the 0.32 and 50% retracements lining up precisely with this previous level of resistance, which is now turned support. And this creates confluence of support. Why confluence of support? Because we have multiple layers of support lining up in the same area of price. And when you have a confluence of support zone, you have an increased probability of getting institutional longing inside of that confluence of support, which at that point further increases the probabilities of a potential push higher away from the level. For now, let's keep that in mind and drop down on the weekly time frame. Well, from a weekly perspective, what we can notice is that this area is quite important structure. It was acting as previous weekly resistance with the creation of this red candle. Then the market broke above that zone and that previous resistance was turned support. So now the market is testing this previous weekly resistance turned support, respecting it as support. And there is the possibility to see some bullish price action being created away from this support area from a weekly standpoint. And we can also notice that we have a minor uptrend developing here with the creation of new weekly higher highs and higher lows. In fact, starting from here, we have a high, higher low, higher high, higher low, another higher high. So from here, more bullish price action definitely seems a possibility for the continuation of this uptrend and the continuation of the creation of higher highs and higher lows from a weekly standpoint. So again, let's keep also that in mind and go down on the daily time frame. Well, from a daily perspective, what do we have? So first of all, I did speak about USDJPY just a few days ago. After the market had created this W formation when the market was here, I explained all the reasons for which we could expect this push to the downside and completion of the W formation at the neckline, which is in fact exactly what the market just did. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. And after the creation of a W formation, what in fact you would expect is first the completion at the neckline and then a rejection to the upside, respecting that neckline as support, which is in fact exactly what the market is currently doing with this rejection to the upside. So far on the daily, everything has been developing as you would usually expect when the market is creating price action like the one that we have here. So before we go more into detail into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing, and let's check the data precisely for the JPY. Now, the first thing that we have to keep in mind is that if we're looking at the data for the JPY, we're actually already looking at the JPY USD because all currencies on the spot are traded against the USD. And what we can notice here is that net positions with the last report have been decreased. We went from minus 132.1K all the way down to minus 138.5K net positions. So we have seen a decrease of the net positions with the JPY getting weaker, and a weakening JPY makes USDJPY stronger. So this means that as institutions are starting to shift back to the bearish side for the JPY, there is definitely the possibility for the continuation of the daily uptrend and also the weekly uptrend that we have previously identified. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, here on the daily time frame, as we were saying, this area is strong resistance. If the market will manage to break above this resistance, all this previous resistance would become support here. And after a break, on the retest of the previous resistance turns support, this is where there is very good probability of getting more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. Because again, this would also be a confluence of support zone because we will have the Fibonacci from the low to this high lining up in this area. And as we said previously, when you have a confluence of support, there is increased probability of getting institutional longing, especially if we are already getting institutional longing, because if institutions are in this case longing the JPY, it means that actually they are shorting the JPY, they are longing USDJPY, because for a very simple calculation, if net positions are decreasing, it means that institutions are adding more shorts on the JPY, and in order to do that, they must be longing USDJPY because every currency on the spot is traded against the JPY. So if we get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market during this move to the downside, at that point, I definitely wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.